Latin America's key banking event, FELEBAN, will this year take place against an international backdrop of unprecedented economic and political volatility. So as bankers start making their way to Buenos Aires in Argentina, where the Congress will be held between the 5th and the 8th of November, I'm meeting here in London with HSBC's global economist James Pomeroy to find out which of the main events and trends taking shape around the world may hit Latin America the hardest. So James, thank you for joining me today.
Pleasure.
As I said, we are obviously in London, so perhaps the first point to open with is Brexit. The UK has voted to leave the EU. What may be the repercussions on Latin America?
Well, for Latin America, we have to think about two things. Firstly, the direct impact. And actually, we expect the UK economy to slow down next year. That will have pretty minimal effect on Latin America because the UK is not a big trading partner. The bigger risks come from the rest of Europe. If we were to see the rest of Europe slow down, which we do expect, we're looking for just 1% growth in the Eurozone next year. Countries such as Spain and Italy and France are much more important trading partners for Latin America. So for big export-driven economies like Brazil and Argentina and Chile, a big slowdown in Europe could actually weigh on growth to some extent.
And of course, the UK exit from the EU may well have such a detrimental impact on the economic growth of the continent.
Exactly, yeah. We're looking for that sort of slowdown in growth is partly due to the weakness in the UK and also some of the sort of spread of globally lower trade, generally a bit of political uncertainty and those sorts of things, meaning weaker growth.
So we talked about UK and Europe. Let's move on to Asia and let's focus on the South-South trade corridor between particularly China and Latin America. So we're now witnessing a much slowly growing China and also a country that is changing its development model.
Yeah, I mean, we're still reasonably constructive on China, but the growth in China we expect to come over the next few years will be in the consumer sector, service sector, not necessarily to the traditional sort of ways that people think about China. And everyone thinks of China as a big commodity magnet, but actually all the growth in China is in domestic consumption and services, which actually you might think on, when you first think like that, you think that's bad news for Latin America. But actually China's going to grow, it's going to still want things, it's going to want to consume things, and that means there's scope for other countries to step up and become the producers of the world. This is some of the other countries in Asia, your Vietnams, your Philippines, India to an extent. These countries will become bigger demanders of commodities as well. So actually your growth from China, so the influence on the rest of the world will be broader, but actually Latin America will be exposed to many more countries rather than just China's growth, and I think that's a pretty good thing.
So new markets may open up as a consequence in terms of destinations for the raw material exports. But what about perhaps other products, more products that are higher up in the value chain coming from Latin America? Do you see that happening and changing trends in any way in the future?
Well, definitely. I mean, of course, Latin American higher-end products will still have a sort of demand base in Europe and the US, but actually this changing Chinese economy is a big boost to high-end products. Got a Chinese economy today that's still reasonably poor, and actually all it wants is commodities to an extent, but as it gets richer it starts to want more services, high-end products, value-added goods, and those sorts of things will really help producers all around the world, and actually I think that could be one of the main drivers of global growth over the next few years.
Now, Latin America is also dealing with its own peculiar problems, and of course, Brazil is perhaps the most prominent representative of this. The largest economy in the country, in the region, the largest banking sector by far in the region, and also a place that has been hit severely and continues to be hit by various scandals, political scandals, and bribery, accusations of briberies. So, do you see an end to this cycle? I know that some economists are being a little bit more optimistic for next year. What's your view?
Well, things have certainly turned around in Brazil. And while we're not expecting things to suddenly return to really strong growth like we've had in the past or where Brazil's potential is, we are sort of over the worst and we're looking for Brazil to return to growth over the next couple of years. And that obviously has a huge impact, not obviously on the Brazilian economy, but on the rest of Latin America, where Brazil is the main trading partner for almost every country in the region. And so actually if Brazil can turn itself around, we add to that some of the sort of turnaround stories in Argentina, some of the sort of falling away of inflation in a lot of these countries, meaning that we're starting to see policy rates come down as well. All of those things should actually be a positive catalyst for Latin America.
Now, one last question. You mentioned interest rates, which are indeed coming down for the majority of countries in Latin America, except for Mexico, which is a different story. And Mexico leads us to the US. As we're recording this at the end of October, we obviously are still relatively far for the election day, for the presidential election date. in the US. But what is your view for the potential scenarios?
So while most of the countries in Latin America are mostly exposed to Brazil, Mexico is clearly most exposed to the US. About 80% of goods exports make their way over to the US. And so that trading relationship is extremely important. And anything from either of the two presidential candidates, whoever may win, that contributes to a sort of shutting down of that border and a lower amount of trade between the US and Mexico would be a big detriment to the economy. We are generally slightly more pessimistic on the Mexican economy as it is, because so much of the growth over the last couple of years has been disproportionately driven by the consumer. And actually, if you've got tighter policy coming through in terms of interest rates, you've got tighter fiscal policy as well, actually you have to be a little bit more pessimistic over the next few years, regardless of what happens with the election.
So quite a diverse picture, but nonetheless very much interesting. Thank you so much, James.
Thank you.